I'm Sean Casper, and I am the expert mentor for you guys today. We're going to talk about investing in real estate. I've known Chirag for quite some time. I'll give a little brief background on myself and how I got here. But just to get an idea of the audience in front of me here when it comes to investing, if we want to just use the chat, we'll use it a few times today. How many people in this group have invested in real estate outside of your primary residence? So if you could just say I have or I want to in the chat, whether you've done a flip, you've owned short-term rental properties. Yes, I have. In process of my first. I have 3 properties. This is great. Not yet. I want to. All right, perfect. That's perfect. Another question I was going to ask is who already invests that wants to invest? So this is great. This is awesome. Who feels that you could get more clients that are investors that you may not be tapping right now? I do. Me. Okay, so that's a big one that we're going to talk about today. That's an important one aside from investing ourselves. So let's jump into this. So, okay. Who am I? So I'm actually, I was one of all of you. I was a Compass native for a long time. So I'm a 15-year residential real estate veteran. Started off as a realtor. So showed homes, knocked on doors, cold called, farmed communities, did everything a lot of you probably do. I started in South Florida, and I ended up opening a few brokerage offices for a boutique brokerage down in South Florida. We ended up being acquired by private equity, and then we were acquired by Compass a few years ago, where I was the regional vice president of Compass Florida. At the time, I was overseeing about 3,000 agents, 189 employees. Those employees were your AEMs, right? Your marketing advisors, operations, the finance team, everybody within all of Compass Florida. So surprised that me and you, Scott, haven't connected in the past. This was just a couple of years ago. So I've seen sales, ops, marketing, management, executive leadership. I've really done it all. I'm a real estate investor. So like many of you, I've flipped homes. I've owned short-term rentals, long-term rentals, used a lot of those purchases for tax purposes. And then most recently ended up getting into the real estate private equity space, which I'll get into a little bit more at the end of this presentation, where we work with developers and we invest with developers all over the Southeast to build multifamily apartment complexes and invest with them. So why did Chirag ask me to be here? Really to educate all of you on real estate investing for everyone who already owns real estate and is investing, and then as well as picking up more properties and diversifying, right? I think we all can agree that we're in an interesting time in the market. Not as many flip opportunities. It seems like the Airbnb concept is, which was amazing the last couple of years, is starting to slow a little bit, which we can talk about and what the future of that looks like. And then educate everybody as well on growing your business with investor clients. So I coached agents for years. That was my skill set when I was at Compass, and then before coming to Compass at the other brokerage here in South Florida. And right now is an interesting time where a lot of agents' businesses aren't what it was maybe in 2022, the first half, or 2021. And I think picking up some investor clients for everybody is a really good way to increase your GCI and supplement your income definitely over the next couple of years. Just some quick takeaways for those of you who haven't invested before. Hopefully you get an education today on how to purchase your first investment property or get started. If you already have, which a lot of you have, it would be a really good thing for you to start diversifying now. And then we could talk about how to either get into some more investments or get out of some others. Learn how to find real estate investor clients and then increase your GCI with these investors. Any questions so far? No? All right, awesome. So we are all, or you are all, I should say, real estate advisors, right? So your purpose as real estate advisors at Compass is to represent clients looking to buy, sell, rent. Those are the main ones, right? Everybody posts all over social media about people buying, people selling, and not so much rentals because we don't love We don't love the renter clients based on commissions on rental deals. But the other big one is to invest in real estate. And after managing thousands of agents, that was not a big topic of discussion. It was always at the end of the year or the beginning of the year, how many transactions am I going to have based on how many buyers am I going to represent and sellers I'm going to represent, and what is the total transaction number and sales volume? But it's not broken down as, what if 40% of my business comes from investor clients, from the people I've sold homes to? Because majority of them can afford to invest. We just might not be providing them access to it. I would say a lot of us don't even know who our buyers or sellers wealth planner is, or who their accountant is, or what they do with their capital, their net worth. These are all conversations that as agents, we should probably be having with some of our customers after a relationship is built and after maybe we've sold their home, right? If somebody purchased a home from you for $750,000, 4 or 5 years later, they sell it for $1.2 million or $1.5 million. They just took 500 or 600 off the table. They have a pretty big tax issue they have to deal with. They're probably going to start to invest that if they're not putting it all into the next property. So it's a very good way, especially right now, to generate some income and to build your business over time by representing investor clients. So again, in the chat, can everybody say and be honest, do you ask every client that when you've sold their home, if they have interest in investing in real estate? Okay, so majority, I was expecting a couple yeses. Majority is no. Yes. Okay, Scott, good one. Sometimes, I think there was a couple sometimes, but many have reached out about investments. Ines in Hudson Valley, yes. Okay, great. So a little mixture of both, and that's what I expected. That's typically how it is. But imagine if you sold 20 homes in a year, or 50 homes in a year. Let's just use 20 as an example, and 10 of them told you they're interested in investing. That could be a lot more that you could generate from that business. So the common answer of why they haven't, why agents have not, when I ask this question over time, is they're not comfortable with it. Maybe they don't understand the benefits, right? And we would think as real estate advisors, we should probably know the benefits of investing in real estate. And I'm sure everybody on here, if somebody asked them the question over lunch, what are the benefits? Why should I invest? Some of you would have very good answers and a lot of great detail based on your experiences. And some would have a little bit more of a vague answer, right? The appreciation. Well, did you know 90% of the world's millionaires got that way from owning real estate, or throwing off different statistics? That's not really giving people detailed benefits that can resonate with them. Also, it's the opportunities. Maybe, realtors don't think they can find the opportunities for their investor clients. Some people aren't numbers people, right? To understand, what does NOI mean? What is return on investment? What is IRR? How do we have those conversations? Another one is, what if a deal goes bad, right? You sell somebody a flip, they can't get out of it, they're blaming you. No, none of us like lawsuits and for those things to happen. And then never thought of asking, which it seems like some people in the chat said that. So it's good. It seems like this is hopefully going to bring some value to the end of it. So kind of a cheesy slide. But if anyone here has ever been to Africa, there's something called the Big Five. And this hopefully will resonate with everybody and make you really have the information and the benefits to be able to rattle off of what the main benefits of investing in real estate in any asset class are. And when you go to Africa, typically on a safari, they say there are 5 animals that you have to see when you're there. And it's the buffalo, the elephant, the leopard, the rhino, and the lion. And I just put this together with this slide because it kind of makes sense to help you remember that these are the 5 that you can remember in your head. One being capital appreciation. This is probably the biggest benefit, depending on someone's situation, which would be, let's say you buy $1 million home, you put down 20%, you put down $200,000. 3 years later, you sell it for $1.3 million after closing costs, right? You're in for 2, you had $200,000 in profit. After you pay off your bank loan, you just made 100% on your money in 4 years, right? So what's that? 25% a year. it's going to be very hard to get that, especially right now in the stock market, in bonds, and in a lot of different investments, maybe some alternatives, but that's what capital appreciation means. I'm sure many of you know, but if there's some that don't, just wanted to give a little context around that. The tax benefits, I'm sure we're all aware of 1031 exchanges. A lot of us probably know what that is. We might not know in details what that is, but there's a lot more. Depreciation is a very big one for rental properties. And for those of you who may not have rental properties or haven't invested before, I would bet that the ones who own 2-3 properties are using it for the depreciation. But let's say you buy a house again for, an investment property or duplex or, $1 million, and you can't depreciate the land, but let's say you depreciate your drywall, your appliances, your roof, any of the contents that are in there that you maybe have put in there, the finishings. And let's say you could depreciate around 30% of that $1 million valued property. That's $300,000. Let's say you made $400 in income that year. You have a $300,000 deduction against your $400 in income. So now you're only paying taxes on $100,000. Most of you probably already know that, but I'm sure there's some in here that don't. That is a very big benefit, obviously, from a tax standpoint, which I know realtors that purchase one investment property per year just for the cost segregation analysis and to use the depreciation for that. Cash flow, owning rental properties, obviously you can get income from that. Leverage is the fourth one, where you can't get leverage when you buy a stock. You buy 10, shares of Tesla, you get 10 shares of Tesla. You can't get financing on that. Real estate's one of the only investments where you can use leverage. And then an inflation hedge, especially right now, everything is going up. The cost of living is going up. It's been that way for the last, year and a half. And, when you have rental properties, the rents are going up. So that's hedging, inflation. I love the depreciation expense write-off. Exactly. Most people do. I mean, when you hear the rich don't pay taxes, that's because a lot of them are using depreciation and other tax benefits, especially in the institutional world, for them to save. 25 to 40%, does that include your primary home? It does. That does include your primary home. Yep, to answer that question. Any questions on these 5 benefits? It is 27.5. Yep. Would you use an LLC or an S corp? I use an LLC for my properties. I just have one that's a holdings company that I use for the investments. Can you share the cash flow calculator at the end of the session? I have a few different ones that I use. I'm happy to email it out. Rapal, is that how I pronounce your name? Rapal? Yeah, I'll share one. There's an easy one. It's super simple. Some of the deals that we use are, or that we do are the cash flow analysis is a lot more in depth. So I'll just share a really clean one that comes down to NOI and cap rates. Okay, let's look. I'll answer a couple more questions, then I'll move on. Does the holding company purchase? So DSTs, I'd love to talk about them. I can't provide too much context. We have an accountant on our board that helps us with DSTs. In one of the sessions that I have is going to be purely on taxes. The reason you would use a DST, and we use them, is for tax purposes. So I'm going to get into that. I think it's the 3rd or 4th one. What's the benefit of using 3 properties in one LLC? All right, 1030. How long do you have to hold before you move on and sell? Is there a minimum of amount of time? All right, yeah, 1030. What is a DST? It's a Delaware statutory trust. There's also a deferred statutory trust. There's a few of them, and they're all for tax purposes. And we'll get into that when we talk about our tax session, which is going to be purely on the tax benefits, which will include DSTs, 1031 exchanges, C stores, which I'm sure a lot of the people here aren't aware of, which are convenience stores where you get 100% bonus depreciation in year 1. we have some products that we use for that. So this is great that these questions are coming in. And you know what? I'm going to ask that. Thurman, can you take some of these questions down for me? This is the chat recorded?
Yep, the entire session will be recorded.
All right, perfect, great. So that way I can answer some of these directly after the fact. All right, so once you've established, okay, I'm going to ask some clients to invest in real estate. I have some people that are interested. This is the big one, which again, we're going to have another session purely on an investor questionnaire. That's going to be the next one that we're going to talk about. In the next session is figuring out what is your client's appetite to invest. And this is a big one. Obviously, so do they have the time, right? A lot of times you'll meet somebody that's a client, and let's say they're a doctor, they're a lawyer, they're an entrepreneur, they're very busy. And they say, okay, I want to start buying duplexes because I want the cash flow, I want the tax benefits from it. They don't understand that they don't have the time. They're going to have to hire a property manager. Sometimes there are agents that own property management companies that help their clients with this. And one of the other things is if they have 2 or 4 or 10 units, that's great if they can manage it themselves or they can hire a property manager, but you're not going to get extremely wealthy by owning 5 or 10 units. You can use it for the tax benefits, but it's also going to take a lot of time out of your hands getting calls in the middle of the night, from a property manager. So if you're an owner operator, I think that's great. Do you have the resources for flips, right? Everybody wants to flip properties when you see what happens on HGTV, and having the resources is just so important from that standpoint of being able to get the right prices for the supplies that you need, for the finishings, for the fixtures, having the right general contractor or subs on call, understanding how to underwrite a deal. I can't tell you how many times I've heard they've got into a flip, they got hard money, they can't get out of it because they didn't underwrite it properly. Do they have the money? That's usually the biggest one, right? Being able to invest, or I remember when an agent called one time and said, I have a client, they're selling their company, they're supposed to have a big deal come in, and I want to start searching for investment properties for them. Meanwhile, the deal never worked out, the company never sold. This agent spun their wheels for a very long time. So, and do they have the want, right? A lot of people got burned back in the last crash. There are some people that they don't want anything to do with it. And if you talk to a client and they say, yeah, I'm not really interested, even if you put a great deal in front of them, it might not be for them. And just to talk about the different options when investing, a lot of people of the public and agents and people in the industry, they think in real estate investing is flipping homes, doing Airbnbs, or owning, a lot of rental properties. There's a lot of different options, right? Flips are great. The only problem is right now it's almost impossible to find a flip. Unless you can find an amazing deal off market, it's very difficult. I've flipped many homes, and just touching on flips for everybody to write this down. I'm sure you may have heard of a formula before. But what I've always used when I do it is you don't want to buy a property for more than 60% of after renovation value, right? So if you think a property is going to be worth $1 million in after renovation value, don't pay more than $600,000, right? 60% of it. It gives you so much room for any unforeseen circumstances. Right. I mean, you're talking about $150,000, $200,000 you can put into that home and still have plenty of room for profit to allow you to make at least 20, 30, 35% on some flips. So that's just something that is a rule of thumb that I always use, that I love to share with people. Look, you could push it to 62, 63, 68%, especially if you really know the market. But 60 is a good baseline to start with when you're talking to clients. If a client sends you an email and says, hey, I think I can really flip this home, it seems like a good deal, you can now very fast figure out, all right, let me run the comp, see what it'll sell for. If it's more than 60% of that, I would guide them to pass, and it'll look really good that you have a formula as well that you use for that. Short-term rentals, look, Airbnbs are great. They've been great for a while, but I've heard a lot of stories recently of people owning them and underwriting the deals they bought based on them being rented for 20 or 25 nights, and the occupancies have gone down a lot recently. So short-term rentals are great in good markets, but I would always look at those deals as, if you were to rent it long-term annually, can you still cash flow, or can you break even if you're in the red? Is there enough appreciation, a capital appreciation standpoint to hold on to it? Long-term rentals are great, obviously, for tax purposes as well. The Burr method, I'm sure there's people here that have heard of that. For those of you that haven't, it's when you buy, you renovate, you rent it out, you refinance, right? So you pull the cash out and then you repeat. So you can keep doing this over time. That's a really good one. You can just Google the Burr method and you can pull it up and look into that. International investments. This is an interesting one that I never even considered until 5 months ago, when the Fed started raising interest rates and what was happening all over the world. And just to give you an example, I know someone that's a builder in London, and they were selling condos to people. They were trying to sell out the rest of their building in London, and they were selling condos in the fourth quarter, end of third quarter into the fourth quarter of 2022, to people from the US just for investment purposes, because of how weak the euro was compared to the dollar. So it was about 96 to the dollar, and now it's, I think, 109. So if you just bought one of those properties and then you sold it for exactly what you paid, you made 15% in 4 months, right? So just using the exchange rate on real estate, people can do. And then private equity real estate, which is what we're in. So all institutional investments, private placement deals with developers, which I'll talk about a little, and then real estate investment trusts, which would be, look, if your client doesn't want to own and operate property, they don't want to flip, they don't want to deal with it. The options for them is really private equity, where somebody else can completely handle it, and they have the net worth to be able to invest into these types of deals, or even REITs, where they're just public REITs that they can invest in, and they can get a smaller but steady return when you look at what's happened over the last 10, 20, 30 years and what these REITs have been able to produce. Okay, any questions so far? In addition? All right, so just to give you a little background on what we're doing and the opportunities that we have from a real estate investment standpoint is, so I was the regional vice president, as I mentioned, at Compass, and I had never really had access to development deals on an institutional level. A friend of mine called me and said, hey, do you want to invest in one of our projects? And I wanted to learn more about it. So one of the projects was actually in St. Augustine. It was 251 units. So I invested in that a little while back. That's actually a picture of it. But there's a few, one in Raleigh, one in St. Augustine, another distressed fund that I'm personally in. But what we do is we build multifamily development projects all over the Southeast. So North Carolina, South Carolina, Texas, Tennessee, Georgia, Florida, in middle market areas, right? We're not building in Atlanta. We're not building in South Florida. It's more of Savannah or Raleigh, Palm Coast, St. Augustine, right? These middle markets where there's a lot of demand. We just saw last week that U-Haul put out their growth index for 2 million one-way U-Hauls that were rented. So it's showing where are people moving and they're taking all their stuff. And it was, Texas was number 1 in 2022. Florida was number 2. And then I believe it was North Carolina, South Carolina, Tennessee, Virginia was in there. So all really Sunbelt states of this migration happening. Florida was actually in the top 3 in the last 7 years. And so what we do is, typically in these development deals, developers only put in 10 to 20% of the equity, usually in developments. They look for the rest of the equity from private equity firms, family offices, high net worth individuals. And most agents that I've spoken with, and even when I was on your side of the business, I didn't really understand the ins and outs of that, of how it worked with development deals. So once I started getting access to them, I started talking to realtors about these opportunities. And a lot of agents had clients that might not want to do the flip or own and operate the property. And they're looking for, substantially good returns. and more of a lower risk investment with institutional developers that have proven track records, this was an incredible option for them. So just in 2022, we raised over 100 million. We did, I think, just 10 funds, just over 10 funds, so 10 development projects. The target IRRs for the projects are between 15 and 35%, right? So we always try and hit low 20s. So what that means is, let's say you had a client that invested, or you personally, we have a lot of agents that invest with us, invested, say, $500,000, and we hit a 20% IRR over a 3-year hold. That would be 20%, 20%, 20% on that $500,000. And most of our target funds, our development projects, are 2.5 to 4-year holds. We have a due diligence process that we put every developer through that we're going to work with to make sure that we go through the underwriting with our board of advisors, who are international tax attorneys, CFPs, wealth planners, so that we make sure that we feel comfortable investing into this. Complete portfolio visibility. So all of our customers have an investor login. You can see construction updates, what's going on with the projects, access to our board of advisors, and then there's other investment opportunities that we put in front of our clients on the venture capital side. So as an example, next month, we're doing a fund with a group out of Grand Rapids, Michigan, that all they do is buy distressed real estate. So they buy real estate for 50, 60, 70 cents on the dollar, which is starting to be common now again, because a lot of people that bought buildings over the last 5 and 10 years have their rates coming due. And if somebody was at a 2 or a 3%, and now they're going to be at a 5 or a 6, they may lose that asset. So this group picks that up. And on a fund like that, we're looking at between, a 5 and 10x from what they told us over a 5 to 7 year hold. So when you average out some of those VC opportunities with the real estate that we're doing, it's a very healthy return that we have structured for our investors. And at this point, we have 45 multifamily assets, 11 self-storage, gas stations, as I mentioned, those C-store funds we invest in, and a little over $2 billion in asset value. So a question I get all the time, and a lot of time from agents, is what does that exactly mean by you're a private equity firm and you raise capital for developers and you syndicate deals? So this is just a really good, simple infographic, even if you want to take a screenshot of it, of how a development deal works. I'm sure some of you know, majority of you probably don't, but will definitely after this. So this is how most syndications work. This is how we work. Yes, I'll share the slide deck, Nicole. This is all recorded as well, so it'll be on the playbook. So how we syndicated a deal. This is one we did in Bradenton, which is just south of Tampa. It was in the 2 to 250 unit range. They're apartments, Class A. They rent from $1,700 to $2,500 a month, give or take. So at the top left, you can see Coastal Ownership Equity. We're a coastal investment company. That's me. That's our partners that invest in every project. Then we have coastal investors. That would be all of you or your clients that invest with us, right? So we come together as an LP. So we're limited partners in the projects, and we are the preferred equity or the limited equity. And as you can see at the bottom right, under the cap summary, limited equity is $14.5 million on this specific project. That's a $71 million apartment complex deal. On the bottom left, you have the land, which is a significant portion of the common equity, which you see on the bottom right. And then the developer, in this case, it was Madison Capital. They're out of Charlotte. They're a multi-billion-dollar organization. They own over 84 self-storage facilities. They've been doing this for a little over 15 years. They're one of the largest development groups in the Southeast. So they represent 40% of the equity in the capital stack, right? So we have 60%, they have 40%. And when we come together and partner with them and we JV with them, that represents 35% of the entire deal. That's the equity in the deal. And then we get a construction loan for 65%. Based on where we're at with interest rates right now, this one we got 65% LTV, but more of them are in the 60% LTV range, which you might hear from investors that you're working with on any buildings right now, or any commercial real estate. And then we end up with a syndicated multifamily development project here where you can see that building. And then we have investors, which would be us, it would be you. And we continue to pay them cash flow once all those properties are rented. And at a certain point, we then exit to a large institution, right? Could be a Blackstone, a KKR, one of these large real estate investment trust companies that they end up fractionalizing and putting our projects into a trust, which goes back to when people invest publicly into REITs, right? They could just be 20, 30, 50 of our projects bundled up, turned into a security, fractionalized, and then sold to their wealth management firms. So that is how a syndication works. Do you have any questions on that infographic? I try to make it as simple as possible. Check. Okay. All right, cool. All right, I think we're getting close to time here, so we'll wrap up. And let's just use that chat one more time. Does everyone feel like you learned something new today? I'm all about value. I want to make sure that hopefully that happened. Okay, awesome. Do you think that you have current clients or past clients that you're going to you're going to ask to invest in real estate after having this call? All right. Where can I start and get to the point? That's funny. So we already went through that. So I was giving you, obviously a breakdown on how to bring on more investor clients, what the investment returns look like, what are the different asset classes you can invest into. And what I would do is reach out to me directly. It's at the bottom of the email. I'm happy to have a conversation with you and get into specifics. Look, all of you have different clientele. All of you are in different markets. There's different asset classes all over. That's what we do. I'm happy to help you and guide you on specifically where to find different commercial real estate opportunities, different investment opportunities for your clients. But this is going to be a 5-month class, and the next one we're going to talk about figuring out what investments would be the best for your clients. We're going to have another one on taxes. So there's a lot of different options. And if you have anybody that you feel would be interested in the opportunities that we can provide, let me know. You can reach out. Do you look for investors for your syndication deals? Yes, we do. We typically have, let's say 20, 30, 40 investors per fund that invest with us. What kind of investment minimum? They range. It's typically 100,000. So I would imagine most of you have clients that can afford. We typically have somebody that says we're looking to deploy, say in the next 6 to 12 months, anywhere from $500,000 to $1 million. And what we'll do is help them diversify that into different deals. So we give them stuff that's in different areas of the country, different asset classes, whether it's multifamily, self-storage, so that they have a good diversified portfolio. Yes, it's very easy to invest with Coastal. Just reach directly out to me. I am the managing director, and I can help you guys and direct you there. Can you please send me information, Jody? Yep, sure thing. I'm going to have everybody's email after this. So if there's any last questions, throw them in the chat. If not, I appreciate everybody's time. Hopefully you learned something out of this and you got some value out of it. And look, reach out to me directly, and I am happy to have individual conversations with everybody. That last one, is there always a 4-year hold? Sometimes they're 3, sometimes they're longer than that. Sometimes it might not be the right counterparty we want to sell to, so we'll hold on to it for 4, 5, 6 years and still cash flow, so everybody will still continue to receive income and distributions on that. So thank you, everybody. I really appreciate your time, and I will see you next month.